Most people will wake up on May 15th and have no idea that something just happened to their money. Not because they were sleeping, but because nobody told them to pay attention. And that's exactly why I made this video today. If you're interested in money, finance, or changing your financial future, like this video and subscribe right now, because what you're about to learn can change the way you see money forever. I want you to sit with me for the next few minutes, not as a financial expert talking at you, but as someone who once had nothing, who made every mistake you can imagine with money, and who slowly, painfully, learned the lessons that schools never teach and parents never knew to share. I want to tell you about silver, about a move that very few people are watching, and about why what happens before May 15th could be one of those moments you look back on years from now and say, I either saw it coming or I didn't. But before we get there, I need to take you somewhere first, somewhere most people don't want to go. Back to the beginning. Think about the last time you checked your bank account and felt that quiet, cold feeling in your chest. Not panic, just that low, steady hum of knowing that the number isn't where it should be. Maybe it was after paying rent. Maybe it was after groceries. Maybe it was just a Tuesday and you opened your banking app out of habit and immediately wished you hadn't. That feeling? That is not a personal failure. I want you to hear that clearly. That feeling is the result of a system that was never designed to make regular people wealthy. A system that was designed to make regular people comfortable enough to keep working, keep spending, and keep trusting that the money in their bank accounts is safe, stable, and growing. Here's the uncomfortable truth. It isn't. And silver, yes, that shiny metal your grandmother might have kept in a cabinet, is about to show you exactly why. Let me tell you about my cousin. I'll call him Danny. Danny is 34 years old. He works in logistics. He makes decent money, not rich money, but enough. He drives a used car, rents a small apartment, and every month, after he pays his bills and buys his groceries and fills his gas tank, he has maybe a couple $100s left over, sometimes less. Danny isn't irresponsible. He doesn't gamble. He doesn't blow money on crazy things. He just lives. He pays his dues. He does what he was told to do. Go to school, get a job, pay your taxes, put a little in savings. And every year, Danny looks at his bank account and wonders why the number never seems to grow in any meaningful way. Why saving feels like trying to fill a bucket that has a hole in the bottom. Now here's what nobody told Danny, and nobody probably told you either. The money in his savings account is losing value every single year. Not dramatically, not all at once, but slowly, quietly, consistently. The purchasing power of that money is shrinking. $100 today doesn't buy what $100 bought 5 years ago, and it won't buy what it buys today 5 years from now. This is called inflation, and it is one of the quietest, most invisible taxes on ordinary people that exists. Think of it like this. Imagine you have a pizza, a whole pizza, and every year someone sneaks into your kitchen and takes one slice. They don't knock. They don't announce themselves. They just take a slice and leave. After 10 years, you look at your pizza and wonder why it's only half a pizza. That's inflation. That's what's happening to Danny's savings. That's what's happening to yours. And this is where silver enters the story. Silver has been used as money for over 5,000 years. Longer than paper money, longer than credit cards, longer than digital bank accounts. Civilizations rose and fell, empires came and went, entire currencies collapsed and were forgotten, and silver was still there, still holding value, still recognized, still useful. Now, I'm not saying silver is magic. I'm not saying it solves every problem. But I am saying that when the systems that regular people trust, bank accounts, savings accounts, paper currency, start showing cracks, the things that have held value for thousands of years tend to get noticed. And right now, those cracks are showing. Here's what I need you to understand. Silver isn't just a precious metal used in jewelry, it's an industrial metal. It's used in solar panels, in electric vehicles, in smartphones, in medical equipment, in satellites, in circuit boards. Basically, in almost every piece of modern technology you use every day. And that demand, the real, physical, industrial demand for silver, is going up. Not down, up. Meanwhile, the supply of silver is struggling to keep pace. New silver mines take years to develop. Existing ones are producing less, and the recycling of silver is not enough to fill the gap. This matters. This is not a story about speculation or gambling. This is a story about supply and demand, the most basic economic force there is. When something people need is running low, the price goes up. That's not a theory, that's just how the world works. But here's where it gets interesting. And I promise you, this next part is the reason I wanted you to watch until right here. Silver has a little brother relationship with gold. They move together a lot of the time. When gold goes up, silver often follows. But silver tends to be more dramatic, more explosive. When silver moves, it really moves. And right now, gold has been making headlines. Gold has been climbing. Gold has been breaking records. And there is a historical pattern, one that has repeated itself over and over throughout financial history, where silver lags behind gold for a while, and then suddenly, almost without warning, it catches up, fast. Traders and analysts who study these patterns call it a silver breakout. And the conditions for one of those breakouts, they are stacking up right now, right before May 15th, in a way that has serious people paying serious attention. I'll tell you exactly what those conditions are in a moment. But first, I need to tell you something that might make you a little uncomfortable. Most people will never benefit from what I'm about to share, not because the information isn't available, but because of a thing called psychological inertia. It's a complicated term for a simple idea. Most of us don't do anything until we are forced to. We wait. We hesitate. We say, I'll look into it later, and later never comes. We tell ourselves we don't have enough money to invest, or we don't understand it well enough, or it's probably not for people like us. And that hesitation? That's not weakness. That's programming. You were raised in a world that told you to leave the money stuff to the experts, to trust the banks, to not ask too many questions. And every time you hesitated on something that could have changed your financial life, you weren't being dumb. You were being exactly what the system needed you to be, passive. But here's the thing about moments like this one. They come, they go. And the people who paid attention, even if they didn't have much, positioned themselves differently than the people who didn't. Let me give you a real example. In 2010, silver was sitting around $18 an ounce. Not exciting, not dramatic, just quiet. Most people weren't talking about it. The news wasn't covering it. Your bank wasn't calling you to discuss it. Then, over the next 12 months, something shifted. Industrial demand started picking up. Investors started noticing gold's rise. The dollar was under pressure. And silver, quiet, ignored, undervalued silver, went from $18 an ounce to nearly $50 an ounce. That's almost a 300% increase in 1 year. Now, I'm not promising that's going to happen again. Nobody can promise that. Anyone who tells you they know exactly what any market is going to do is lying to you. But here's what I can tell you. The conditions that existed before that 2010 move, they look a lot like the conditions right now. And the people who understood what they were looking at, even the ones who only had a few $100s to work with, changed their financial trajectory in a way that took years of regular saving to match. Danny never heard about it. He found out about it years later when it was already over. And he had that quiet, cold feeling in his chest again. Not because he missed out on getting rich, but because he realized he had been paying attention to the wrong things his whole financial life. I don't want that for you. So let me break down in the simplest possible way what is happening right now and why May 15th matters. First, you have to understand something called market catalysts. A catalyst is anything that causes a sudden, significant change in the price of something, like throwing a match into a room full of dry wood. The wood was always there. The conditions were always right. The match is just what starts the fire. Right now, there are multiple catalysts stacking up around silver simultaneously. The first one is monetary policy. That just means what the big central banks, like the Federal Reserve in America, are doing with interest rates. When interest rates are high, money sitting in banks feels relatively safe and rewarding. People feel less urgency to move their money into things like silver or gold. But when interest rates start coming down, or when people start expecting them to come down, the calculation changes. Suddenly, sitting in a savings account paying low interest starts feeling less smart. And historically, when that shift happens, money starts flowing into precious metals. Right now, there is a lot of market speculation about interest rate moves happening very soon. And that speculation is creating pressure that builds under the surface before it releases. The second catalyst is geopolitical tension. I know that sounds like news anchor language, so let me translate it. The world is messy right now. There are serious conflicts happening. There is serious uncertainty about trade, about currencies, about alliances. When the world gets scary and uncertain, people historically run toward hard assets. Things they can hold, things that aren't dependent on one government or one country's stability. Gold and silver have served that role for thousands of years. They don't become worthless because one country's economy crashes. They don't freeze because a bank has a problem. They exist independently of all of that. And when a lot of people start thinking this way at the same time, demand spikes. The third catalyst, and this one is honestly the one that keeps serious analysts up at night, is the physical supply situation. Here's a simple way to think about it. Imagine you run a pizza shop. You need cheese. You order cheese every week. But over the last few months, the cheese farms have been producing less. The trucks delivering cheese have been slower. And suddenly, 10 new pizza shops opened in your area, and they all need cheese too. What happens to the price of cheese? It goes up, fast. That's exactly what is happening with physical silver right now. The industrial demand is accelerating because of the global push toward clean energy, electric vehicles, and advanced technology, all of which need silver. At the same time, mine production is not keeping up. And investment demand, people buying silver bars and coins as a store of value, is climbing sharply. When industrial users, investors, and governments are all competing for the same limited supply, something has to give. And historically, what gives is the price. Now here's an open question I want to leave in your mind for a moment. If all of this is true, and the data strongly suggests it is, why isn't everyone talking about silver the way they talk about stocks or crypto or real estate? That question has a very interesting answer, and I'll get to it. But first, I need to tell you about something called the paper silver market. Because understanding this is like pulling back a curtain on a magic trick. And once you see it, you can't unsee it. When most people think about investing in silver, they imagine physically buying silver, like bars or coins. But most of the silver that gets traded every day in financial markets isn't physical silver at all. It's paper, it's contracts, it's promises. Financial instruments that say, I own a claim on silver without actually holding any real physical silver. Think of it like this. Imagine a coat check at a restaurant. You walk in, hand over your coat, and get a ticket. The ticket represents your coat. Now imagine the coat check person gives out 50 tickets for every one coat they actually have. As long as everyone doesn't show up to claim their coat at the same time, the system works. But the moment people start doubting whether the coats are actually there, the moment everyone rushes to the counter at once, the system collapses. Some analysts believe the paper silver market has been used for years to suppress the price of silver, to keep it artificially lower than where physical supply and demand would put it. Whether you fully believe that or not doesn't matter for our purposes today. What matters is this. When the gap between the paper price and the real physical demand gets too large, corrections happen. Prices snap back toward reality, and those corrections can be sharp, sudden, and dramatic. And right now, that gap is looking very, very large. This is where everything changes. Because I'm not just telling you about silver as a concept. I'm telling you that the specific timing window around May 15th has multiple data points converging in a way that is getting unusual attention from people who watch these markets professionally. There are important economic reports and policy announcements scheduled for this period. There are technical chart patterns. And don't worry, I'll explain what that means, that are flashing signals. And there is a measurable increase in physical silver purchases by large institutional buyers, the kind of buyers who move quietly and early before everyone else catches on. A technical chart pattern is just a way of saying when you draw a picture of how something's price has moved over time, sometimes that picture shows you a shape that historically precedes a big move. It's like weather forecasting. You see certain cloud patterns, certain pressure systems, certain temperatures, and you say, based on history, this usually means rain is coming. You're not guaranteed to be right, but the odds shift significantly. The chart pattern for silver right now is one that technicians, people who study these pictures professionally, are calling a coiled spring, meaning the price has been compressed, has been building tension, and statistically tends to release in a significant upward move. Add to that the fundamental factors, the supply, the demand, the monetary environment, the geopolitical pressure, and you have a picture that serious people are not ignoring. But here's what I really want to talk about, because this isn't just a video about silver prices. This is a video about you, about the Danny in your life. About the version of yourself that wakes up every Monday and feels like the financial gap between where you are and where you want to be isn't getting smaller. It might even feel like it's getting bigger. I want to talk about the real reason most people never build wealth. It's not because they don't work hard enough. Danny works hard. It's not because they're not smart enough. Danny's smart. It's because nobody ever taught them how money actually works, how the financial system actually functions. And more importantly, how to think about money in a way that puts them on the right side of economic shifts instead of the wrong side. Here's a mindset idea that changed everything for me. Think of your money not as a pile of cash, but as a vote. Every dollar you have is a vote for how you believe the world is going to work in the future. When you keep your money only in a savings account in paper currency, you are voting that paper currency will hold its value. When you invest in silver, you are voting that industrial demand will grow and that hard assets will be valued more highly over time. When you invest in education, you are voting that the skills you build will remain relevant. There is no neutral vote. Doing nothing is still a vote. Keeping money in a low-interest savings account while inflation eats it is a vote, a losing vote. The question is not whether you participate in the financial system. You already do. The question is whether you participate consciously or unconsciously. Now, here's what I'm not telling you to do. I'm not telling you to take every dollar you have and run out and buy silver tomorrow. I'm not telling you that silver is a guaranteed win. I'm not a financial advisor. I'm someone who has studied these patterns, watched these markets, and lost money making the kinds of mistakes that come from acting impulsively on excitement rather than thoughtfully on understanding. What I am telling you is this. Moments like this, when multiple forces align around a specific asset at a specific time, are rare. And the people who are positioned before the crowd arrives are the ones who benefit most. The crowd always arrives eventually. The crowd always notices eventually, but by the time most people are talking about silver on the evening news and your neighbor is calling you about it, the early opportunity has passed. That's how these moves work every single time. And the painful irony is this: the people who most need financial wins, the Dannies of the world, the middle-class workers, the students just starting out, the people living paycheck to paycheck, those are exactly the people who find out about these moves last. Because they're not watching the right channels, they're not having the right conversations, they're not asking the right questions. But you're here, right now. Which means something in you is paying attention. Something in you knows that there has to be a better way of understanding money than what you've been shown. Let me give you something practical to hold on to. If you're someone who has never thought about owning any silver, here's how simple it can be. You don't have to buy heavy silver bars. You don't have to open a complicated investment account. The most accessible form of silver ownership for regular people is simply buying silver coins from a reputable dealer, 1 ounce at a time if that's what your budget allows. Not as gambling, not as a get-rich scheme, but as a deliberate decision to have some portion of your savings in something that has held value for 5,000 years, that has real industrial demand behind it, and that is right now, in this specific moment, showing every historical signal of being undervalued relative to where it is headed. There are also financial instruments called silver ETFs, which are funds you can buy through a regular brokerage account that track the price of silver. Think of it like owning a slice of silver without physically holding it. Easier to buy, easier to sell, accessible to almost anyone with a smartphone and a few dollars. And there are silver mining stocks, companies that dig silver out of the ground. When silver prices go up, these companies often see their profits multiply dramatically, and their stock prices can move even faster than silver itself. Higher reward, but also higher risk. That's always the trade-off. The point isn't which specific path you choose. The point is that you understand the landscape, that you know the door exists before it closes. Here's the uncomfortable truth one more time, because I need you to feel this. The financial system rewards the informed and penalizes the uninformed. Not out of malice, just out of mechanics. Knowledge moves money, and the people who have access to the right knowledge at the right time are the ones who end up on the right side of economic shifts. Every generation has these moments where the window is open, where the informed act and the uninformed wait until it's too late. Your parents might have had moments like this with real estate before prices exploded, with certain stocks before they multiplied, with gold before it went on its historic runs. Maybe they saw it, maybe they didn't. Maybe they told you about it, or maybe they didn't know how to explain it, or maybe nobody told them either. That cycle of financial opportunity passing from one generation to the next without the right knowledge being passed along with it, that cycle is what keeps ordinary families ordinary for generations. And breaking that cycle starts with moments exactly like this one, where you decide that paying attention to how money actually moves is not something for other people. It's something for you. I want to share one more thing before we get to the end of this, something that ties everything together. There's a concept in economics called the wealth transfer. It sounds technical. It's actually devastatingly simple. Every major financial shift, every period of inflation, every currency crisis, every commodity boom, every market shock transfers wealth. Oh, it doesn't destroy it. It moves it from the uninformed to the informed, from the passive to the active, from the people who trusted the system blindly to the people who understood the system clearly. The 2008 financial crisis was a massive wealth transfer. Millions of ordinary people lost their homes, their savings, their retirement accounts. At the same time, a small number of people who understood what was happening, who saw the cracks before the collapse, made fortunes. Not because they were evil, not because they cheated, but because they saw reality clearly when most people were still believing the comfortable story they'd been told. A silver move before May 15th, if it unfolds the way the signals suggest it might, will be a smaller version of the same dynamic. Some people will be early. They will benefit from the move and feel the satisfaction of having paid attention, of having taken an informed position. Others will watch from the sidelines, confused, and wonder why they didn't see it coming, and some will rush in after the move has already happened, buying at the top out of fear of missing out, and they will be the ones who get hurt. The difference between those three groups of people is not intelligence. It is not luck. It is not connections or privilege or special access. It is simply information received at the right time, combined with the courage to do something with it. You're here. You received the information. The only question left is what you do with it. I'm not asking you to change your entire financial life overnight. I'm not asking you to take risks you can't afford. I'm asking you to do one thing, one simple thing. Make a conscious decision, not a passive one. Look at the information. Look at the signals. Look at where silver is right now, where the conditions suggest it may be heading, and make a deliberate choice, not out of panic, not out of greed, but out of the quiet confidence of someone who is starting to see how the financial world actually works. Danny still hasn't made that decision. Last time I talked to him, he was still putting his couple $100s a month into the same savings account, watching the same numbers barely move, feeling that same quiet hum of quiet anxiety on the first of every month. He's not a failure. He's just still waiting for the right moment. Still telling himself he'll figure out the money stuff later. Still trusting that someone somewhere is going to take care of it for him. But here's what I know about later. Later has a way of becoming never. And the financial distance between where Danny is today and where he wants to be is only going to get harder to close the longer he waits. Not because the world is unfair, although sometimes it is, but because the cost of inaction in a world of inflation, of shifting markets, of wealth transfers, is not staying still. It is falling behind, slowly but consistently, every single year. You don't have to be Danny. You are already making a different choice. You made it the moment you decided to watch this video all the way to here. So here's where I leave you. Not with fear, not with urgency designed to panic you into something you're not ready for, but with this single clear thought. Silver is telling a story right now. The supply is constrained. The demand is accelerating. The monetary conditions are shifting. The chart patterns are coiling. And a specific window, the days leading up to May 15th, is drawing attention from the kind of people who move early and quietly before everyone else catches on. Whether you act on this information or not is entirely your decision. But you can never again say that nobody told you. You can never again say the opportunity passed without your knowing it was there. The window is open. What you do next is yours to decide. And whatever you decide, make it a conscious one. Make it an informed one. Make it the kind of financial decision that the version of yourself 10 years from now would be proud of. Because that version of yourself is counting on the choices you make right now. If you learned something new today, make sure to subscribe to Money Insights and like this video. More powerful financial truths are coming next.